What is up, YouTube? Welcome back to another post-trading analysis video. This is going to be like a Bitcoin checkup and a post-trading analysis video in one. It has been a minute since the last post-trading analysis video because I'm also on vacation and I'm not trading as active. Because it's also summer times, right? So the volatility is a bit less on the traditional markets and the crypto markets. But we have a lot to talk about. I think there will be a lot of new people listening to this video from the stream with Max as well. So shout out to all the new people out here and shout out to the OGs, of course. So I'm just going to start, giving my thoughts on Bitcoin, some updates on Bitcoin, and then we'll go over the trades I have taken the past 2 days. And for the new people out here, this is the place to be if you want to learn how I trade, because I go into great detail about how I actually execute the trades. And I'm a scalper, so I'm on the lower time frames as well, but the concepts that I apply on the lower time frame, you can apply them on the higher time frame as well. It becomes way easier on the higher time frame because you have way more time to see them and to think about them. Okay, so I've been talking about Bitcoin and this Model 1 reaccumulation, and we have officially broken structure. Right here, we have broken the structure, the main market structure from the top down. So on the daily time frame, we have lower highs and lower lows all the way down. And this is officially a break of structure. The reason why this is a good break of structure and not a fake break to hit supply is because, one, the moment we break this daily candle right above our market structure high and we pull our volume profile tool, right, we can see that the day after we get this perfect back test of the volume area low closing higher. This actually confirms that we have a proper break. If it was going to be a fake break, you would want your first break of structure candle to mitigate supply and then the second candle to immediately reject from it, right? That's when you can kind of give the argument of, okay, it's going to be a fake break because the only reason the break happened was to mitigate supply. No, the moment we had this break, the day after, we had a back test of the volume area low, and then we closed higher. So the break actually worked if you compare it to the day afterwards, right? Well, then the third day, we have that rejection. And I've told you guys that this rejection was was most likely to happen because it was the only supply remaining, We right here had that sell to buy, leaving this 4-hour order block with imbalance behind, and it's the only order block there is until 70.8K. So we confirmed our break of structure, having a very aggressive V-shaped recovery right here, and then we broke structure at the supply zone that was stopping us from going to 70.8. But this is probably temporarily, right? What we want to see right now is for price to respect its highest time frame market structure pool from the low up. Meaning this is our market structure from the low. On the 6-hour time frame, we have low, high, higher low, higher high, higher low, higher high. Okay? It's more like 8-hour time frame. Yeah, we can call it 8-hour market structure. So after this break, what would be ideal is for price to respect its highest time frame structure from the low up. Because as we know, expectational order flow after a break of structure is obviously a higher low for a higher high, and the most ideal place for the blue drawing to put in its lower or higher low is for it to respect its red drawing. It's when your structure from the top down is correlating and aligning with your structure from the low up. So this will be the ideal place. And you guys should also know that if we are trading an accumulation schematic with our 1 tap, our 2 tap, and our 3 tap, we can put in a test. So if we grab the accumulation, as you can see right here, you have your SC, which is your tap 1, ST, tap 2, spring, tap 3. What follows after spring? A test. And the test is just simply a higher low. And then we have an LPS, which is your last point of support, also in higher low. So your SC, ST, and your spring are your 3 taps. SC, ST, spring. And now we can just put in our test or LPS, whatever you want to call it, which is just a higher low. Now, It would have been amazing if price just continued to pump after backtesting that volume area, because it was just so beautiful, right? It was perfect. But we're getting the rejection from the supply zone, which is normal. We had a very aggressive expansion towards the upside, and now our first important market structure low is the 2-hour. So we know that our 6 to 8 hour time frame low is all the way down here, and we have this demand backing us up right here. It actually got mitigated ever so slightly here, but that doesn't matter. We can pull it more down, and we still have some unmitigated demand. And even this little zone right here is also demand. But this is the first sign of local weakness, is breaking that 2-hour structure. Because if we extend it on the 2-hour, let's skip past these points. Right here, you have higher low and higher high on the 2-hour time frame. Okay, so this is actually a pretty important market structure low. If we break this aggressively right here, and we do get that reconfirmation, I do think we're coming back towards that demand zone. But it's even better if we do come back for that demand zone, because it's really giving price no reason to come back later for it, because the demand already got mitigated. But still, the break of structure is confirmed. It's a good break. The moment we break this, that confirms that the range high is in play, but it doesn't mean that we immediately have to go to the range high, okay? It just indicates that we will come to that range high before going to that low right here. And a higher low is most likely after breaking structure, okay? So very easy play. If we do start breaking that 2-hour low and we start making our way down, you just wait for it to break back to bullish right here. Wait for it to break back to bullish on this break of structure, imaginary break of structure, and then that's your confirmation, right? That's where you can search for longs and swing long it up towards the range high. And I would definitely take a take profit right here, because it's your only supply remaining before touching the range high. Meaning that's something I call extreme supply, okay? This is extreme supply because it's the last supply remaining before taking your range high right here. But there's nothing to worry about. I already saw a few posts about that this could be like a fake break, or like, I don't know, people were calling that this was just a fake move towards the upside. No, because every fake move towards the upside on the left here, fake move towards the upside, fake move towards the upside, fake move towards the upside, all those move towards the upside, they didn't break structure. This is the first time we've broken structure in this downtrend that lasted 30 days. Okay, so this is not a fake move, because the move actually did something. This low actually did something. It broke structure. All these lows right here did not break structure. Okay, so nothing to worry about. This model 1 is confirmed. We will go to the range highs before going to the range lows, if we ever come back towards the range lows in this bull run. And we do not want to lose this green box right here. Okay, the green box is outside that volume area, but that doesn't matter, right? The volume area is just there. It will be nice to respect that 2-hour. It will be the most easy to just put in a higher low right here, also respecting this volume profile reclaim, but it doesn't have to happen, okay? It's not something to stress about if we do lose it, but if we do lose it, you can expect this to get filled probably, okay? But you just don't want to lose the low at 56.6. So that's just it for Bitcoin for me. I have not taken any trades on Bitcoin, but yeah, I'm expecting a higher low either around that 62.65 area, or we probably make our way down towards the low 60s and the 59 area for that higher low for the test. But the Wyckoff schematic is confirmed, and we'll go to the range highs before going to the range lows. Now, having Bitcoin out of our way, first trade taken yesterday was on Solana. So to give you guys a bit of context, Solana is trading in a massive range. And as we know, ranges, they rotate from the upside to the downside, etc. And what we had is right here, we came into extreme demand. Again, your last demand remaining before touching the range low right here. Came into extreme demand, and guess what? We had a Wyckoff accumulation schematic. I will talk a lot about Wyckoff because it's my main thing that I use while scalping the markets as well. And that Wyckoff tutorial will go online this weekend. So if you cannot follow it properly this video, don't worry. This weekend, a Wyckoff video tutorial will go online. But we had our range low right here. We had our range low. We had our first sweep of the range low, indicating a potential accumulation schematic in the making. We broke structure from the upside right here, from the top down, broke structure right there. After breaking structure, expectational order flow is a higher low. We tapped into this demand zone right here. It was a beautiful demand. And that's our Model 2 Wyckoff accumulation schematic, okay? Target of the accumulation schematic is always the range high right here, which got tapped right there. So we had also on Solana a pretty aggressive move towards the upside, and we swept these highs on the left, right? We had this liquidity high right here. Boom. Liquidity point right there. And we had a pretty aggressive move. So I already have the two in replay mode. And what I saw is after trending up pretty aggressively, we can obviously expect some sort of consolidation / retracement. Now, we were forming a range after grabbing a significant liquidity point. So I was expecting a range that potentially broke towards the downside for a slight retracement to happen. So zooming in, if we follow structure from the low up right here, we have high, low, higher high, higher low, higher high, higher low, higher high. And then that higher high actually swept the liquidity on the left. And right here, we're in an uptrend. So we pull our range from the top to the bottom. Boom. And we have our two range points confirmed. We have our range high. We have our range low. Okay. Then we swept the range high perfectly. Sweeping all that liquidity on the left as well was a very significant liquidity point, indicating a potential distribution in the making. And what actually ended up happening is we got a, right here, what ended up happening is that we got a retracement down, start ranging at the EQ of this bigger range. Let's extend our new range high towards the new deviation high right there. Dots indicating that it is a deviation of this initial range high. And then as you guys should know, or if the newers, they don't know it, but the third tap of a Wyckoff Model 2 schematic has to either do one of the following two things. It needs to grab all liquidity inside the range, or it needs to hit extreme supply or demand. That's the only way a third tap of the Wyckoff schematic is valid. The most extreme liquidity prior to taking the range high, otherwise it's not a Model 2 anymore, is this right here. This is your last high before taking the range high, your last proper market structure high, meaning this is your last liquidity point before taking the range high. And obviously a Model 2 has a lower high than the second deviation. Okay, if I pull my Wyckoff schematic with it, you can ignore all the phases. Just watch the tabs. BC, UT, UTAT mean three tabs all going higher than each other. That's a Model 1. A Model 2 has a lower high. So the UT and then a lower high. And this is the UT and a higher high. Okay. So Model 1 has three tabs all going higher. Model 2 has three tabs where the third tab is lower than the second tab. Okay. So the only way a third tab can be valid is if it grabs either all liquidity or hit extreme supply. So this was our last supply zone. This was our last supply zone, and then that was our last liquidity point. So it smashed through the supply, grabbing that last liquidity from it, which is totally fine. And now the way we confirm a Wyckoff distribution, same way as a Wyckoff accumulation, we wait for structure to break back to bearish. So we have to measure what is the structure from the lowest point towards the highest point between tab 2 and tab 3. So let's say this is potentially going to be tab 3, tab 2, tab 3. This is the lowest point between tab 2 and tab 3. And then we measure the structure from the low up. Okay, measure the structure from the low up. We have a high, higher high, higher low, higher high, higher low, higher high. So the moment we break this market structure low, that confirms that this distribution is going to play out and price will come to the target, which is the range low. Same way the target for an accumulation is the range high, okay? So I was also checking my volume profile because I love a break back inside the volume profile. It would just be amazing. So checking the volume profile, we have the volume area high right here. So if we break that market structure low, you'll also break back inside this volume profile. So that could also mean a rotation towards the volume area low and lower. Now, pressing replay mode, boom. Right there, we have our market structure break. That's where you would go short. You can put your stop here, which is the correct way to do it. But we also have structure from the top down where we have a lower high and a lower low. So if you're feeling risky and you're pretty confident that it's not going to break outside of the volume area high again, and it's going to respect the structure from the top down, the same way I would like for Bitcoin to respect the structure from the low up, you can put your stop here, okay? But the safer way to do it is to put it above your Wyckoff point, because that's the clear invalidation. You target the low, 1.77, pretty high confluence setup, because this second tap took such a major liquidity point. Let's get rid of it. Boom. There's your back test. Perfect back test if you want to wait for it to improve your risk to reward. I entered on the break and I entered on the retest, so I got an average entry of around here. There you go. Targeting the low, and then even checking, because that's an improvement point for me, to see if it can have any follow through. While checking price action on the left, there's not that much right here that can hold price up, right? Only until here is when we start seeing some sort of range demand again. So I was having like a 75% TP at the range low and checking if I could pull the 25% more down. Letting price play out. We got the move down to follow. There you go. It got the pullback, but it kept on respecting structure from the low up until right here we got the move down. Boom. Okay, hitting my target. So what happened here is that, you know, we had some demand remaining down here, which is, again, is your extreme demand, is your last demand remaining before tapping the range low. So we can always expect a bounce from there. Got the move down, formed a new range in here, right? Formed some sort of new range in here, deviated from the range high just to tap some more supply and go lower, okay? Target being hit, distribution being completed. Nice 2% gain on Solana. Very good Wyckoff Model 2 distribution schematic. Very easy play. Looked clean. The distance between the taps is amazing. It grabbed all that liquidity and it broke structure. That's the only confirmation you need, right? Exiting replay mode. What we've been seeing now is just some ranging. That's it, okay? Next trade on MATIC. Oh, I don't have this one in replay mode. Next trade on MATIC was, again, a distribution schematic. So what we see right here, is price actually going into a very significant resistance point of interest, which is right here. It's your last move up. This is the last move up before significantly going lower, right? Last move up before significantly going lower, meaning in that move up, sellers must have taken over and pushed price down immensely. That's why this is supply, okay? That's why it's supply, and we can expect a rejection there. Now, the way we came in there, again, following structure from the low up, right? Following structure from the low up, we have, on a higher time frame, you'll probably have higher lows and higher highs like this, okay? And then what happened from here is, we can confirm this, by the way. Yeah, the 1 hour had a break here, but on the higher time frame, this is probably just like 4 hour structure. Yeah, there you go, like 3 to 4 hour structure. That's fine. But we came into our POI, so our resistance point of interest. And the way we came into that was amazing, because again, following your most local structure pool right here, you have higher lows and higher highs. Right here, higher lows and higher highs. In an uptrend, you pull your range from the top down. There you go. And then this is our range. And right above that range, we have that significant resistance zone, okay? So we could get a potential distribution deviating the range high, tapping into that supply zone. So we had our initial range low right there. Right here we have our first deviation, okay, indicating a potential distribution in the making. Zooming in on a lower time frame, what happened is that price came back up again, right? There was no reason for this to potentially be a Model 2 distribution, because if we just watch the structure from the lowest point right here, between this tap and potentially this tap, let's say you thought it was going to be a model 2, we never broke structure. You never broke structure back to bearish. So it could never been a model 2, okay? No, it was such a massive resistance zone that price wanted a deeper mitigation right here. And what is this? One tap, deviation 1, deviation 2, all deviations going higher than the previous high, indicating a Wyckoff Model 1 distribution in the making, right? Now, when is a Model 1 distribution confirmed? If you break structure the exact same way as a Model 2, if you break structure from the lowest point towards the third tap high between tap 2 and tap 3. So this is tap 2, this is tap 3, this is your lowest point. If you break structure from the low up, that's when your distribution is confirmed. Now, if we're on the 3-minute time frame and we have to pull structure, we have a high, low, and then higher high, okay? So then this will be your low. Far away, it's pretty huge. Just because we're not going to short here, put our stop above that third tap high just to target the low. The risk to reward is not worth it, okay? On a lower time frame, I was like, do we have structure on a lower time frame that ends up breaking higher or having a bearish break higher up so we have a better risk to reward? This looks like 1 minute structure, but it's actually not, because these are not 2 consecutive bearish closing candles, because the second candle high right here went higher than the previous candle high. So the previous candle is an inside bar candle, and I don't use that. An inside bar candle is whenever you have a candle and the candle after it, okay, is in between the highs and lows of the previous one. So this candle is between the highs and the lows of the next one. So it's an inside bar candle, and I don't count that as structure. If that was valid structure, you could wait for that being broken right here, and you could short right there, and then put your stop above the high, and then target the low for a 3 risk to reward. I didn't get an entry because structure did not break until this low right here, and I'm not going to short there with the target way lower. Now, something a bit more advanced is that whenever you have a Wyckoff Model 1 schematic that ends up not hitting its target immediately, it can have a significant pullback, right? Before going lower again, and then you can kind of count it as a 1, a 2, and a 3. It's a way for Wyckoff Model 1s to go over in Wyckoff Model 2s, where this is your tab 1, this is your tab 2, and this is your tab 3. You can also still count it as a Model 1, but then you will just have to say, because if we look at a Model 1 schematic right here, you'll have to say that your LPSY, which is indicating a lower high, is just way higher up than it's usually. Both arguments are correct. You can count it as a Model 1 that went over in the Model 2, or you can just say the lower high of this Model 1 was way higher up, okay? Both are fine. I like to count it as a Model 2 because then I can use the rule again of the third tap that a Model 2 must listen to, which is grab extreme liquidity or hit extreme supply. So let's extend this towards our range high. If we zoom in, what's our last liquidity point? Pulling structure, we have low, lower high, lower low. Okay, this is your last significant high in this range. This becomes your liquidity point right there. Let's see what price ends up doing. Boom. Right here, we take that liquidity point, so we know if we break structure from the low up, so we can make this our tab 3 now, okay? If we break structure from the low up between tab 2 and tab 3, which is between this point and this point, our Wyckoff distribution is confirmed, and that low is right here, okay? That low is right there. So if we break that low, this distribution is confirmed, and then we can target the range low right here. Let's check if we also have a break back inside the volume profile. If that happens, yes, we do. So that's always an extra nice confluence, okay? Always an extra nice confluence. Waiting for that break to happen. I always check what's the highest time frame valid pull. Right now, that's the 3-minute. So let's wait for the 3-minute to break back to bearish. Boom. There is your bearish break right on this candle. Bearish break of structure. You can put your stop above the third tap high, which is the clear invalidation, and then you can target the range low. Okay? Target the range low, and price moves towards the range low perfectly, right? Again, we came into a significant area of resistance. We looked for a potential range creation. We saw it. Initially, there was a model 1 with deviation 1, deviation 2, deviation 3, but there was no good confirmation. And you become more advanced and you watch more of my videos, you realize that model 1s can go over into model 2s or a more extended model 1. And then again, we use that same rule of it. The third tap needs to take all liquidity. It did. Wait for the structure break from the low up and confirm an entry. Okay. So also a nice 2% gain on MATIC. So we had a 2% gain on SOL, 2% gain on MATIC using the exact same entry model, which is a Wyckoff distribution. And last trade that I had was on gold on the traditional markets. And on the traditional markets, I put a bigger emphasis on market sessions. So I always want to check where my session highs and lows are. So what we had initially on a higher time frame is that, we have this massive range schematic that initially started like a distribution or was looking more like a distribution, but we never broke structure from the low up, never confirming the distribution. Here, if I show you guys right here, it was looking like a distribution, but if we follow structure from the low up, let's say this was going to be your high. If we follow structure from the low up, we just have higher lows and higher highs, right? Higher lows and higher highs. So we never confirmed the distribution. So there was no reason to get trapped into any short positions because the distribution was never confirmed. And then we ended up breaking higher, okay? It's not a confirmed range break yet, but it is pretty significant seeing this distribution potentially fail. Could turn into a bigger model 1 though, where this is just your 1, your 2, and your 3, if we want to make this purple to make it look more clean, okay? But I knew that was a probability, and zooming in, we had a very aggressive expansion towards the upside, so I was waiting for potential consolidation, maybe a range for a slight retracement, or just, a reaccumulation where we have a Wyckoff at the bottom and we just go higher. That's always a possibility. But what I noticed before New York opened yesterday, Wednesday, checking my market sessions, the purple are my Asia range, and then the blue is my London range, and then New York is my green range, and then pink is my New York PM session. What I saw is that just by following structure, right? Just by following structure from the low up on, let's say, the 45-minute time frame, if we come from the bottom, we have a move up and then a move down, okay? In an uptrend, pull your range from the high towards the low, right there, and then that is your range. And what was so significant about this range is that if I pull on and put on the market sessions, we can see that our range high, is actually our Asia high, and then London open is inside the range highs, or the London open is inside the session high and low of Asia, meaning a lot of liquidity has been built up between this high point and this low point, because we have the high point here, we have the low point here, and then we just have price action internal, not taking those extreme points. So everyone that has significant trades here and significant trades here, that put their stop here or that put their stop there, right? Building a lot of liquidity above these POIs. So we have London, which is inside of the Asia highs and lows, and then New York open. So I was watching for a move up, grabbing London highs, grabbing Asia highs, which is also just your range high, and then a break back inside for a potential short. Okay, so what happened? Okay, the indicator just gave up on me. It's giving an like this signal, but this is our range high right here. This is our range low. And then right here at 15:30 my time, UTC plus 2, 15:30 right here, this is where New York opened. Let's make it orange. Let's make it orange. This is where New York opened. I wanted a move up, taking the London highs and taking Asia high, which is what we got right here, deviating that range high. And I wanted a structure break to confirm my entry. guys, I always confirm an entry on a break of structure, okay? So what is our structure in our most recent expansion towards the range high? From this low, we have higher lows and higher highs, like this. This is a wick. A wick is not a lower low. A wick actually means the opposite. It makes this high weak. So higher lows and higher highs. So this was our structure low to break to confirm an entry. Whenever I am trading second taps, so this is a second tap. When we trade a Wyckoff, you always trade the third tap. This is a second tap. It is a must that you have a break back inside the volume profile. Well, look at that. The volume area high is right there. So if you break the low, we have a break back inside the volume profile. Let's wait for it. There is our break. The risk to reward was not the best, but I started scaling in on the break, put our stop above the high. And because, the London lows were inside of the Asia lows, I targeted the range low. Normally, when I trade a second tap, you cannot target the range low because why? Well, range deviations, they can have many internal rotations before tapping an extreme point. They can have many internal highs and lows, right? Before tapping one of the extreme points. So whenever you're trading a single range deviation that's not a Wyckoff, you cannot target this low. But the reason I targeted the low this time is because we had a lot of liquidity build up here because of those Asia lows and London lows. Okay, that's the only reason why I took a target that was the actual range low on a deviation play and not a Wyckoff play. Okay, we got the move down very aggressively, retest right there, which is very normal, and then we went lower. Okay, it was only a 1-to-1, but I was very confident in the setup, so that's why I still took it. You rather want a 1% gain than a 0% gain if you know the setup is going to play out. Okay, so recap, we traded the range deviation. This was your Asia high aligning with your range high. New York took it, broke structure back inside the range and back inside the volume profile, and we had the rotation towards the range low. So I've made around 5% in total, 2% on Sol, 2% on MATIC, and then a 1% on gold. Okay, so normally I aim for 10% a week. We still have one trading day tomorrow, but I'm not really pushing the setups on a summer time. Normally like Q3, it's not really the best time to trade. Whenever we go into Q4, that's when we press the fucking speed and the gas pedal on it, right? That's when we absolutely hammer trades because Q3 and Q1 are the best, or Q4 and Q1 are the best times to trade out of the year, okay? October, November, December, and especially the beginning of December, the end of December isn't good. And then middle of January and then February, March are amazing, okay? This is when we take it a bit more slow and really reflect on what we can do better, especially after having the first 6-7 months of the year completed. What went good, what can we do better? And then we take that with us into Q4 of this year to have the last blast of the last 3 months, okay? But that was it for me. If, for the newcomers, this is still a bit like magic language. The distributions and the accumulations and the Wyckoff schematics, the way I use them and the way I trade them with my rules, it will all become more clear after that tutorial. So if you guys like the video, if you guys have any questions, comment below. I will answer every single question asked in the comment section. And I'll see you guys in the next video. Peace.